here we go. We're talking about now, since this is recapping everything, all of our results of all engagement types, we're going to cover everything, right? Even though we saw single audits and governmental audits and all of those engagement types in other lessons, this is here to recap it all, to really hone in on the end product of all these engagements. Now, what are we talking about here? What's the reporting? Reporting here is going to be reporting on generally accepted auditing standards. So if we're just doing a normal, I'll call it a normal audit. I know I like to use that term a lot, but a just standard audit. For following governmental auditing standards. So here we're doing a governmental audit, and here we're doing a single audit, which we know there's the requirements for a single audit, a little more intense. It's generally for those entities that receive federal funding. Okay, so what do we have that applies to all three? And we see here that the normal audit, not saying normal audits are less stringent in requirements than other engagement types. However, just with these particular criteria, this is focused much more on these governmental and single audit types. So what is the difference here? Well, no matter what, with these three, if you're following any of these three standards or procedures, you are going to have an opinion or a disclaimer of opinion on the financial statements and supplementary schedule of expenditures of federal awards. If there is not any expenditures of federal awards for a normal audit for just a company, you're obviously not going to mention that. However, for all engagement types, yes, you're going to contain a schedule of how these entities spent their money. If it really has to do more with the governmental entity or with an entity that receives federal funds. For just a governmental audit, so you're auditing a municipality, auditing a state, auditing some sort of governmental entity, as well as auditing a company that receives federal funding, you are going to have a report on internal control and compliance with provisions of laws, regulations, contracts, and grant agreements. Now, what are we going to have here? This is just for single audits, these two. First, we're going to have a report on compliance and internal control over compliance applicable to each major program. If this doesn't sound as familiar, definitely revisit the single audit lesson. This report must include an opinion or disclaimer on compliance. You just want to talk about all the programs they have. If they are a hospital, they may have multiple different programs. One is a cancer center, one is pediatric center, one is an addiction center, and all of those are going to receive federal funding, and those would all be the different programs. And through the determination, if one is a major program, which again is much more in the single audit lesson, that is going to be what we need to separately break out and issue the report on. Lastly here, for a single audit, we are going to issue a schedule of findings and questioned costs. So you're really you're being skeptic, you're saying, is this entity that receives federal funds, right? You're just receiving it essentially for free, right? That's kind of the picture you want to paint in your mind is these entities are receiving government funds, that's taxpayer money, so we want extra eyes, extra requirements for them to follow, and extra reports on how that money is being spent, and questioning minds from these auditors. Looking through what we've got here, we're comparing our compilations, examinations, and agreed upon procedures. And these are three engagement types. And let's see the differences between them and some criteria for all of them. First, do you need to identify that the financial statements that you're either compiling, examining, or performing agreed upon procedures on are prospective? And that's going to be yes for all three. Prospective financial statements are those that are essentially forecasting what the financial statements may look like in the future. They may not come to reality. And as we'll see, we're going to talk about how the caveat that the prospective results may not be achieved. Let's just kind of go hand in hand with these. So yes, you need to make it clear that these are prospective financial statements, meaning that let's say it's January 1st now, and you're creating financial statements for the end of the year, 12/31. You are going to have to put in your report that these prospective results may not be achieved. Likely they won't be achieved, right? Not exactly to what is being shown. And then, so identify that they are prospective. Now, do these engagement types have to follow AICPA standards? That is going to be a whopping yes for all of them. And what about limitation of scope? Can you perform these engagements if there is a limitation of scope? And for agreed upon procedures, I'm going to start with that one. Yes, you can, because this is the most customized engagement type. We talk about that in the lesson on agreed upon procedures, where it's very much kind of like a hybrid, like consulting type engagement. So yes, you can have a limitation of scope because whatever scope you're going to have here is going to be agreed upon, and it's amorphous. You can kind of make the scope whatever you want. For examinations, you cannot have a limitation of scope. This is a very much a set type of engagement per the AICPA, so you can't really edit that. And for compilations, you can have a limitation of scope. You need to obviously disclose anything like that, but yes, you can do that. Now, an enumeration of procedures performed, big fancy words here, basically meaning do we have to list out all the procedures that are performed? enumeration, just a listing of those. Now, we don't for compilations and examinations. Really, the reason being because the types of procedures you're going to do during these are standard, set by these engagement types per the AICPA. And you're making quite a big deal in the report that, yes, you're doing a compilation, you're doing an examination. And with that being said, it's understood what procedures you're going to be performing here. Whereas agreed upon procedures, one of the big points with this type of engagement is that it's very customized, and the procedures you may be performing are not going to be particularly known. And as such, you need to include in your findings a list of the procedures that you did perform. We talked about the caveat that the prospective results may not be achieved. Right? It's just definitely, it's like, all right, everything looks good, but guess what? The economy could tank. Things won't be looking good after that. So that could completely edit what you thought the projection was. Now, the CPA has no responsibility for updating the report. In this case, yes, the CPA will not have responsibility for updating the report in any of these circumstances. But once you issue your report, it's done, it's over. You don't have to think about it, sign it, it's over. You don't have to worry about possibly updating that after the fact. What about, are we going to issue an opinion on prospective financial statements in accordance with AICPA presentation guidelines? Only for examination reports. We know examinations are a little more intensive than compilations, and then agreed upon procedures are a little more off on their own. Now, examinations providing a little assurance here. With this, we are not going to say that the financial statements are going to happen that way because they're prospective. They're what may happen in the future. What we are doing is providing opinion if they are fairly presented. If fairly presented, if they have any crazy possible wild estimates, or if they're just wrong. Maybe they put cash as a liability, right? They messed up their presentation, their accounts. So yeah, we're going to give an opinion on the presentation. And lastly, limited use of report. Well, in all of these cases, generally agreed upon procedures, yes, they're going to be very much limited in use because it's a very customized engagement type and you're doing it specifically for the management, for a bank, for the board of directors. Now, generally speaking, limited use projected financial statements, these are going to be limited in use because you don't want this getting out to the general public. Let's say that we have, Burger King. All right, nice. I remember going there back in the day. You got Burger King, they're doing financial statements, and investors are going to invest in that company. Well, I know it's not a public company, but anyway, the private investors are going to invest based on their financial statements. And with that, well, if you accidentally let prospective financial statements get out into the public, which are not particularly going to come true, well, guess what? People may make investing decisions based on those financial statements, and that would be an issue because that's not the real results. So we are going to limit the use of the report for projected financial statements and generally much more speaking for agreed upon procedures. Diving into another wonderful chart we've got here, we're going to see different engagement types, these attestation services, and if you can perform them through an examination, review, or AUP. Now, first off, an AUP is only going to be allowed to be performed as an AUP. Well, pretty straightforward. That is a specific type of engagement there. Now, we see prospective and pro forma financial statements, and really, these are quite similar in the sense that there are financial statements forward-looking, and they are going to present a financial outlook at some point in the future. However, prospective financial statements, what are these? These are going to be forward-looking and based on assumptions about the future, saying, okay, we assume inventory is going to increase by 5%, revenue is going to decrease by 2%, applying different percentages and assumptions for the future. Let's say it's only the beginning of the year. We create prospective financial statements about the end of the year. We would say, okay, expenses are going to increase by 2%, right? Just keep applying those there. Whereas pro forma, these are historical and reflect hypothetical scenarios or events. So these would be financial statements that we could prepare saying, oh, these would be what the financial statements would look like if we, let's say, opened up a new branch in another state, right? Or expanded our operations or did something or sold off part of our operations. A kicker here, and if this is something that you've seen on the business exam, this is going to be much more, prospective is more sensitivity analysis, and this is more scenario analysis. Sensitivity analysis being, what happens if we change our revenue account by 5%? Scenario analysis is, what if we choose scenario A, B, or C, a completely different scenario. That's what we're going to be looking at there for those two. And just, this is going to be memorization, right? For in prospective financial statements, you're only going to do this for an examination or AUP. For pro forma, this is either going to be an examination or a review. Now, a compliance engagement either needs to be an examination or an AUP. This is something we see in our compliance engagements lesson. And an D and A attestation service, where you're coming in to either examine or review those disclosures and everything from management. That's going to either need to be an examination or review. And lastly, attestation service for service organizations has to be an examination. Moving on here, we've got our 3 types of engagements, and then what amount of assurance are we providing for each? What's the result of each? And then what's similar to? Now, examinations, here you're going to provide reasonable or positive assurance. You're going to issue an opinion. For a review, you're going to give limited or negative assurance, and you're going to issue a conclusion. And for an AUP engagement, you are not giving any assurance, and you are providing a list of findings and a list of procedures that you did. Now, in terms of examinations, this is going to be similar to an audit, statements on auditing standards. For a review, this is going to be similar to, not similar to, it's really just a review, right? This is a whole thing in its own lesson with preparations and compilations. And then agreed upon procedures are kind of their own thing, really, there. Making sure you're getting this down, memorizing it, having a good time while doing it. Remember, AUP provides no assurance, but procedures and findings are listed. Here we've got another graphic where we're going to go through the procedures done for each compilation, examination, and AUP. So for prospective financial statements, for compilation in the compilation report, you're going to assemble those prospective financial statements. In an examination, you're going to evaluate them. And then in an AUP, you're going to apply specific procedures. Now, the responsible parties' assumptions, these are management's assumptions. In a compilation engagement for the report, you're going to assemble those. For an examination, you're going to evaluate them because you're giving an opinion. And then for an AUP, you're going to include them in the prospective financial statements. Now, if we ask the question, are financial statements and significant assumptions in conformance with AICPA guidelines? As we remember from our compilation review in that lesson, we're going to look for obvious errors. We're not going to do extensive procedures. However, for an examination, which we know is more similar to an audit, we are going to issue an opinion on the financial statements and the assumptions there. Whereas for AUP, we are going to disclaim that because, again, it's kind of more a customized engagement type. Now, lastly, are we going to obtain agreed upon scope from the engaging party? Well, that is really only going to be for agreed upon procedures. We need to, before the engagement, agree upon what's going to be happening. Whereas for compilations, examinations, a lot of these other types of engagements that have strict AICPA standards, these are going to be, again, quite laid out for you already. You're not going to really have the ability to change the scope of the engagement other than what the engagement needs to perform and follow. You can't say in an audit that you're going to perform limited procedures. No, audits, you're going to have to perform substantive procedures, tests of controls, all of those. Whereas in an AUP, you can obviously modify that, change it up a little bit. Let's take a look at our various report formats for our SSAE engagements. We've got examination, review, and AUP again here. Now, I'm just going to really hit on the important points here. For the lead-in, the intro for these examination, we're going to say we have examined, and then we're going to say what we examined. For the review, we are going to say we've reviewed. However, there is not any official verbiage for our AUP. For our management responsibility portion of the report, in both the examination and the review, we are going to say management is responsible for, and we're going to elaborate upon internal controls, preparation of the financial statements, etc. And then for AUP is different, right? Because this is a customized engagement where we are going to say that we have performed procedures listed below, agreed upon by the management, and board of directors, whoever that may be. Management is responsible for whatever we are doing an AUP on. We are going to mention that the sufficiency of the procedures is the responsibility of management or whoever that identified party is. We are performing the procedures that were agreed upon. However, if those procedures are sufficient is up to management. Obviously, we are lending our opinion, our thoughts on what is sufficient. However, at the end of the day, it's up to those who are hiring us. Lastly, we make no representation regarding the sufficiency of those procedures. We're not taking responsibility. Again, we will give our input. However, at the end of the day, we're being hired to do X, Y, and Z. We're going to do that. We're not going to say that those are the end-all, be-all procedures that need to be conducted. In which of these engagements are we going to list out the procedures and findings? Well, that's going to be in our AUP. Like we mentioned, examinations and reviews are pretty standard, so that doesn't need to be listed out, whereas AUPs are going to be customized to different for every engagement, and as such, you need to list out those procedures and findings. What is the culmination here? In our examination, we are going to express an opinion, and tying that in, we are going to plan and perform and give reasonable assurance. For our review, we're going to give a conclusion, and we're also going to plan and perform to provide limited assurance. For our AUP, we are going to say that our agreed upon procedure in accordance with the attestation standards found these conclusions, these findings, we performed these procedures. What else are we going to say? We're going to say our examination is in accordance with attestation standards, and similarly with review, and specifically for the AUP, we are going to say that we did not perform an examination or a review. These are just items that the AICPA needs you to include there in order to make it so that there is no confusion for the readers. A couple other points for the review. You want to make sure you include in there, you say that a review is less in scope than an audit. We do not express an opinion. And lastly, again, for AUP, had we performed additional procedures, other matters may have come to our attention. Really just covering your butts here, right? As we see over and over again, trying to dissuade any legal liability. Make sure you are quite familiar with all the items you see here. Here we've got another graphic where we are just listing out the different services you can do, which standards they follow, the engagement type, which we kind of saw earlier on a previous slide. Just make sure you know these. All these graphics, if you like some more than others, please use them. They all introduce a little bit newer information, and obviously, again, really make sure you have these down. For example, that you can do an audit, examination, or AUP of compliance, making sure you're familiar with what types of engagements you could do for each service type, which are restricted use, which assurance types are provided by which engagements, and lastly, just any other criteria you see here. Now, over here, service organization control reports. This is going to be our type 1, type 2. If you want to revisit this, make sure to revisit the internal control lesson, right? Definitely important to see our type 1 and type 2 SOC reports. We've seen this in just about every course that and every lesson that we've seen. Just wanted to, since again, this is really a catch-all, to make sure that everything we've seen, the most important points that we've seen throughout the entire course, are reiterated here, and you don't forget them, you don't miss them. Take a good look. Make sure you are familiar with this through and through. This, I'd say, is top 3 in terms of most important graphics, most important charts you will see. We've covered this in many a lesson, so make sure you continue to have it memorized. Here we've got a nice summary of other points. Again, just want to reiterate, these are all graphics you would have seen in other lessons. Just taking them again, showing them to you here, making sure, reminding you that, hey, you should definitely remember all of these. Take a good look. Make sure you know what procedures are performed for each engagement type, what standards they follow. I mean, that is just going to be also incredibly important. What are you going to work on? And then what is your end product, your end goal? Last graphic here, last chart before we dive into some more text. This is going to cover our preparation, compilation, review, and audit. We did see this in our lesson on preps, compilations, and reviews. So take another look, memorize this just here for your benefit. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.